let's go over the current plan. Let's go over our indicators that we're looking at. Let's go over our current positions. Okay. So, first of all, since we're here, Bitcoin and Ethereum, I still haven't changed my plan on that. Okay. I still want to see that red line get hit on our Bitcoin to gold ratio. Um, did trading view? No, they didn't. Okay, so I wanted to hit that red line first. Okay, uh, that would be nice. All right. If we don't get that red line, at least I want to wait for around 1,200 or so on Ethereum. Okay. Um, we'll see. Okay, and a lot of that also depends on the New York high low line and some of the other indicators that we're looking at for risk on, risk off. Um, Based on the positives that we've seen, more highs over more lows, the one of the moving averages is now over the other. The 4 EMA is now over the 9-day EMA on the New York high low line. Okay, so if this continues going up, we do need to see it go over the 20-day EMA. Without it going over that, that means that most likely the bear market continues. Okay, so what we want to see is that curling up, make and preferably we would want to see it make a higher low, but just curling up, that would at least signal to us that yes, the next bull market could possibly have some legs. We haven't seen that yet all year. Okay, so let's wait for that signal. Okay, and once we see that signal, of course, I'm going to share that with you guys. All right. Advanced decline line is still going up, although it is slowing down a bit. Let's see if that continues or not. We've already gone over this, but TIP TLT is one of the indicators that I'm very, very closely looking at. I think that the TIP TLT, a lot of it is, we're probably going to see it in commodities first. Whether or not, how long will that take? That just remains to be seen. That's very, very hard to time. Where is my TIP TLT? Oh, there it is. Okay. Yes. So this is still up. As long as it's above this dotted line, I think that the inflation trade could come back. Although it may bounce around this for a couple of weeks and then head up. And I do think that the DBC might be the tell if this curls up or not. With different commodity prices going up, that could be where the shock comes from. Okay. Also, another thing that I'm looking at too, as far as indicators, our junk bonds AD line that we have on our Discord. Right now, HYG, the junk bonds ETF, is down. If we see an advance over decline of 25 plus 25 or more, that puts us over the June 2nd highs. That would imply that our junk bonds AD line just made a higher high. Okay, that hasn't happened yet. We need an advance over decline day today plus 25 or more. Okay, in the past 10 sessions, the average session gave us plus 158 advances over declines. Okay, so we really need to see a decline in order to not see that higher high on the junk bonds AD line. All right, so I am monitoring that as well. At the end of the day today, I will show you guys that. That's an indicator that only gets updated at the very end because it's an advanced decline, so it's based on the closing numbers. Okay, so our currency indicators, the main one again, the dollar, King dollar coming back. Okay, coming back over its 18-day moving average. Euro is my other one. As the euro comes down, that is a risk-off sentiment. It is under its 18-day moving average. All right. The plan, HUT. I still want to buy HUT when it gets below that 165 zone. Will we get there? Hopefully. I think we might. We'll see. All right. Ford, again, it's up again today. Wow, it's still going up. Will we see 1380 or so? I really hope so. I really, really hope so. Again, that's still part of the plan. PPC still around that 29.30 zone, 29.40 zone. I will be buying Pilgrim's Pride as well. SPY, I am close to abandoning these levels at this point. I don't think we're going to see that. I will be buying once I see my indicators turn up. So that's the New York, high-low line that we go over every day, as well as the junk bonds AD line. Once I see a pullback, a meaningful pullback, and I see those divergences happening in those two indicators, I'll just go ahead and buy SPY shares at that point. Okay, so that's my plan for SPY. Let's go over our current positions. Again, UVXY, I'm still in UVXY. I'm still in my call spreads, the 14.24s as well as the 15.20s, long the 14, short the 24, long the 15, short the 20. All right. What else am I still in? Oh, I'm still in QQQ, of course. This is the biggest position that I have so far. All my positions combined, it's about 8% of my speculative account that's invested. I'm still 92% of my speculative account in cash. But I would say almost half of it is in QQQs. All right, it's in those November spreads. 305, 295. Long the 305, short to 295 for November. Okay. IWM, I'm still in those IWM put spreads for both October and November. Both are in the 180, 170. Long the 180 puts, short the 170 puts. The 180, 170 put vertical spreads for October and November. The same strikes. Okay. Same strikes. All right. Next, FEZ. That's our Europe ETF. I am still in the 32.27s, although I may put a stink bid in and close out the 27 puts and just have the 32 puts open. Now that the 27s are at minimum value, I might as well just close it out, add a little bit more to the cost basis, and then try to just go naked on puts and try to get the full movement if FEZ goes down. This is still a relatively small position, so it wouldn't really cost me all that much to close this out. I might go ahead and do that, but I'm still in the FEZ 32.27 put vertical spreads, long the 32, short the 27. EWT, which is Taiwan, I am still short Taiwan via puts, a put vertical debit spread for December. I'm in the 49.40s, long the 49, short the 40s, and then of course DIA. Dow Jones Industrial Average, pain in my side right now. October's 300, 290 spreads, long the 300, short the 290s. We'll see if that pays out or not. But so far, that is what I have. Okay, so that's my current trade plan, what I'm looking at, my indicators, and my positions. Boom. Checkmate trading. All right. Any questions, comments, rude remarks? This is your time.